Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at silver using the SLV ETF. It's been a couple of weeks since I covered silver on YouTube, but very little has changed, to be absolutely honest. We've been looking at a running flat pattern and an expanding flat pattern for months now, and we're in a situation where we can confirm one or the other depending on certain levels we may or may not break. So let's go straight into the Elliott wave count and see what we're looking at, and then we can do some basic technical analysis to wrap up the video. So we completed a primary wave 1 in August 2020 last year by my count, and since then we've been correcting into a wave 2, which we are assuming in this flat pattern, running flat pattern that we've completed. So 3 waves down, 3 waves up, and then 5 waves down in a diagonal to complete a C, and now we're impulsing out of here to head higher. So that's the running flat pattern. We're looking for a break above the 28 level, as that invalidates the bearish count, and we're looking to stay above the 22.13 level. I am currently supporting this count as my preferred count. Gold, having invalidated its bearish count, suggests that gold completed a wave 4 at the same time essentially as silver has completed a wave 2, and so the two may well be operating in parity and in sequence with one another, but with silver a full step behind gold. Silver reached a new low in the 2020 sell-off, gold didn't, so we're looking at a macro move to a wave 1 for silver, but a wave 3 into a wave 4 for gold, so we're a full step behind. Now they don't have to move in tandem, but it's reassuring when they do. So for the moment I will be viewing any pullback to this initial move. If we get a 3-wave pullback, I will be seeing that as a buying point, as an entry opportunity to trade. Now it's not a big deal for me to worry about that. I've been a long-term accumulator of gold and silver in both its physical and paper forms, as well as owning a lot of gold mining and silver mining stocks. So I've been accumulating for years. However, I would take the opportunity for a trade if I see a 3-wave pullback after a 5-wave move up. We may be close to completing a 5-wave move up. We may have already completed a 5-wave move up here and done a very quick 1-2, but I'm not so sure. All I want to see is some kind of significant pullback that I can get into, knowing that my validation point is below me, and then I can set my stop and we can get on our way. So that's the bullish count we've completed. We're impulsing higher. If we come back below this 22.13 level, then the bullish count is wrong. If we go above the 28 level, we can have more confidence in it. So let's come over and have a look at the more bearish count. Now this is an expanding flat, so we have a 3 waves down here in an A, a 3 waves down here in a B, but we're counting our 5-wave move down here in our diagonal as a leading diagonal of a 1 rather than the completed C. So we've actually got 5 more waves, a 2, a 3, 4 and a 5 yet to come, and we're looking at a 5-wave move down in a C into a 2. So a much deeper correction we'll be looking at here, which would potentially bring silver back into the $16 to $17 range, which honestly I would not complain about that for a second. The premiums in the physical silver market are enough to make you physically sick. And I'm not exaggerating. It literally is unpurchasable for me at the moment. I cannot bring myself to pay those premiums. So if we shook out enough people and had a brutal enough sell off, those premiums would come back down, and my greed can be satisfied down here. But I have to say, it is my bias for wanting lower pricing, which is probably giving me. I have to acknowledge that bias is present, and that's why I want it to come down here. However, I accept that it might not. So what do we like about it though? Well, if we take our, assuming this is an expanding flat, because we've got an A and the B has come back beyond where the A began, so the C would complete around anywhere at the 123.6 or the 1618 would be the most preferred places. The 1618 is right here in this volume node here. I pointed this out several times, right here in this volume node, and it just so happens to coincide, being off of this as a wave 1, it just so happens to coincide with the 61.865 region. Okay, here's the 61.8, the 65 overlaps it exactly. So this is like your yellow zone down here, the golden ratio 61.8 and the 65 bound just beyond it. Right, so that comes right down into this area too. So this is a possibility. Now, simply enough, if this count is wrong, and the bearish count is wrong, and we are impulsing up and we are heading higher, which is my preference for the moment, with gold having confirmed it, and a pretty substantial sideways correction for several months on both gold and silver. Then all we need to do is move above this invalidation point. This is a bearish invalidation point, and if we go above $28, then this bearish count is incorrect. So all we do for the moment in the bearish count is, assuming this is a wave 1, we interpret the price action as a zigzag for the meantime, a 5, 3, 5, rather than a 1, 2, 3, 4, 5, so forth. Right, so that concludes the Elliott wave count, because there really is nothing else to talk about. You just need to watch those levels. $28 to invalidate this bearish count, and 22.13 to invalidate that bullish count. Treating it as bullish for the meantime, looking to buy a pullback. However, this is, as always, is not financial or trading advice. So, now that we've done that, let's do some basic technical analysis to wrap up this nice short video. We're going to get rid of our Elliott wave count, and we're going to bring up our 10 exponential moving average in yellow, our 20 in blue, our 60 in orange, and our 250 in green. We're also going to bring up our RSI, which is set to a 10 close with a green 30 level for oversold and a red 70 level for overbought, and our MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. And we have a volume profile here, which we've already used to project that C on the bearish count. This shows us the various peaks and troughs of the buy-sell volume, with the yellow dashed line being our point of control. Alright, let's come out to the weekly time frame and we'll work our way back in. So, very bullish candle last week. Just flat out bullish candle. Wick to the downside, which tested the 10 exponential moving average to the tick, the yellow line, and then bounced vigorously off of it, with a thick body candle here for the close of the week. Right, so we've moved down on the RSI since August last year from overbought conditions into neutral territory, between the 40 and the 60, peaking just out of neutral territory here, and we're just out of neutral territory again, but not overbought yet. We do, however, have pretty reassuring signs here in the MACD on the weekly time frame. Bearish momentum has reached an extreme. We've got a very, very, very bullish hammer here with a huge wick to the downside, very little body, and a nice follow through. So really nice reversal candle here with a nice full bullish candle leading us higher, and we've got bearish momentum dying off, and the short-term moving average ready to cross over the long-term moving average likely this week, and hopefully see a return to the bullish momentum with nice green bars and the histogram emerging. And then it's a case of, do we pop? Because if we do set a 1, if this was a 1-2 and we are moving into a 3, this will pop. If we're looking for that 5-wave move, we will get a little pullback for a while, and then we can push on again. So let's come down to the daily time frame and see what we can see. Right, so on the daily time frame, we are above the 10, the 20, 60, 250 exponential moving averages after moving below the 10, the 20, and the 60, dragging the 10 and the 20 through the 60 with the price below it, which was quite bearish. But then we've bounced very violently after hitting oversold conditions, hitting 25.11 on the RSI, which is always nice to see, because we've gone from over in the shorter time frame here. We've gone from overbought to oversold, overbought to oversold, and now we're moving back up again. So we're reaching overbought conditions, and maybe heading into that 5th wave on the smaller time frame to find a top at overbought. If I said oversold earlier, I'm sorry. To find, if we find a top at overbought, we could pull back into these moving averages or through them perhaps to find a wave 2 and then get moving again, or we could just be flying from here. For the moment though, we're looking bullish above all the major moving averages, dragging the 10 and the 20 back through the 60 to the upside with the price above it. That's bullish. Increase in bullish momentum over the last few days. Brighter green bars on the histogram, short-term moving average starting to accelerate away from the long-term moving average, which is supported by the momentum on the weekly time frame as well. So that's it, guys. Really, things are looking better. We look like we've bounced. We look like we're heading higher. Any short-term pullbacks on the any pullbacks in the short time frame should be seen as buying opportunities, unless the situation changes and we break those levels we spoke about. We invalidate the bullish count or we invalidate the bearish count. So there you go. Thank you for joining me on this technical analysis of silver. I hope you've enjoyed it, and if you have done and you're new to the channel, then please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And also a quick thank you to my patrons. Your support is greatly appreciated. If you're interested in becoming a patron and gaining all the different benefits there are for the different tiers, and you can follow the link in the description box below and go and have a read. And also, if you're not following me on Twitter yet, there's a link to my Twitter feed in the description below as well. Alright then guys, take care, and I'll be back with you later in the week. All the best. Bye bye.